Smart Traders. This is Rob Reinhold. I'm joined by Mr. Ankit Sharma. And here we are in the currency room and another great week of trading. So put that week in the bag and let's look forward to next week. In this session, we're going to go through what happened last week, look at the news, look at the broad markets, and we'll look at what happened with the currencies. Then we'll take a new look at the markets and say, okay, have things changed? Both Ankit and I do think things have changed here in the overall market sentiment. We'll talk about that here. And always, we're looking for setups. We're looking to pair the strongest against the weakest in the currency markets.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
The big news last week came on Friday. We had pretty much a down week most of the week, but on Wednesday, we actually had a little bit of a bottom. Thursday, we fell and then recovered. And then Friday, we got the strong jobs numbers. We'll take a look at that in just a second. Right after the job numbers, the market tanked and tanked hard. And all of a sudden, about 30 minutes into the day, people decided that it was actually good news for the market. And we ended up closing up near highs and not having such a bad week after all. Most of the selling this week was due to bond yields and the dollar. Both the bonds and the dollar were very strong, but they look really tired. And we'll take a look at both of these charts. They look tired. Starting off the week on Monday, we did get ISM manufacturing. It was better than expected. Now, ISM has been below 50 for a very long time. And we've talked about how there's been a manufacturing recession for about the last 16 months. We're now creeping back up to the 50 area, which is neutral at 49. We did hear from the RBA. They came out and said no rate hike, which was just as expected. Not a lot of news on that one. Then we heard from the RBNZ on Tuesday. Same thing. They did not raise, but their statement was a little more dovish than the market expected. The market thought they were going to be a little bit more hawkish. They were a little bit more dovish. So both the Aussie and the Kiwi didn't have great weeks this week. On Wednesday, we got this ADP employment report. And I want to point out just how crazy this week was. Because look at that number. 89,000 jobs when 150,000 jobs were supposed to be created. That is a huge miss, and the market liked that news and rallied on it. Then on Friday, take a look at that number. 336,000 jobs created when the estimates for 171,000. That's a huge number. Totally opposite of the ADP report. The market freaked out at first, then recovered. I also want to point out, look at that Canadian number. You thought the US number was good. The Canadian number was fantastic. Triple the jobs created and a fall in the unemployment rate. Just, again, a really strong report. That being said, the dollar didn't really strengthen on this news. We have a saying at Maverick. We call it sentiment. I don't know if there's a better name for it, but we've called it sentiment for years. When something doesn't go up when there's good news, it's telling you it's exhausted. It's exactly what happened here. Ankit, what did you make of both the Canadian and the U.S. employment reports on Friday? How do you think that changed what we're looking at in the markets?
I think what we're looking at is, again, for good news initially was a bad news for the markets, but at the end it's good news for the market. So, it's like, how can you sell a strong economy? And I think that's where we are at. There's a lot of fears. There's a lot of uncertainty around rising bond yields, which has been the talking point for the last couple of weeks. But here we are. The price action at the end of the day is the king. Last Friday, we also had a big reversal as well. So it seems like Friday is sort of a reversal day. I mean, we were looking pretty terrible this morning before we were making that reversal. So I think the way we are ending the week is on a positive note, which is likely to carry forward into next week. If you look at longer term charts, like on the weekly charts, we are seeing some signs of exhaustion. U.S. dollar has been running since late July, early August. The equity markets are sort of in this extreme fear level. So, I mean, these are the points where we start to see reversals, and now we are also hitting the point of the seasonality pattern where the markets are a lot more volatile in October before they bottom out. Is that going to play out again this year? We have to still see how the confirmation we get next week. But right now, if I have to really put the odds on it, like the chance it looks better for market to rally next week. Again, we'll see how long that rally lasts. That's a big question. We get these bear rallies. I want to emphasize that this is still a bear rally. We are not making higher highs and higher lows. So it's a bear rally. But how far do you think this bear rally will go? Again, the time will tell. But right now, I think we are in the bear rally mode.
Yeah, and we'll definitely take a look at all these things that you talked about because I really like what you said. We are at the end of the seasonality pattern. I've been talking about this for literally the last month. And we talk about it every year, and we started talking about it in the 1st of August, saying, hey, everybody, September 1st to October 15th is typically the worst 6 months of the year. Here we are. It is at the end of that period. We're like going to be August 9th on Monday. That's right at the end of it. Ankit, I think you're right. I think we do look exhausted here. All right, so this is where we ended up the week last week. We said cryptos looked weak. The yen looked weak. Pound, Swiss franc looked weak. We'll take a look at how these all changed here. And the first part of the week, we liked Kiwi and Aussie. And boy, both the central banks really made them not all that great of plays by the end of the week. So last week, let's talk about equities first. We had the S&P up about 0.5%, which again is such a win. When you could look at this week, it really was a tough week. We'll take a look at the chart here in a second. World markets still down a little bit flat. Crypto down. Take a look at oil, down 9%. That was the biggest mover of the week. Looking at this chart, I did the end of the day video on Wednesday, and I talked about this candle right here, and I said, hey, this is a potential reversal candle. And then we got this candle on Thursday, which isn't the best candle, but it's also not the worst candle. At one point, it was an ugly candle, and then it recovered by the end of the day. Now, we love to see when we get these bottoms, we love to see these big green candles after. That's what we like to see. We didn't get that off of this bottom here, but we did get a recovery off this low. Friday's candle, maybe it just came a day late. This is the kind of rally we like to see. And Ankit, I think you're exactly right. The only question is, where does this rally stop? Do we break out of this resistance point? Or do we simply come up here and roll back down to new lows? It's too early to tell. I'll give you my opinion, but I'm not going to trade my opinion. I'm going to trade the charts. Right here, right now, this is nothing more than a bear rally. And you have to say that this rally is going to fail at 43.40 on the S&P. That is literally less than 1% away. Okay, so the market has a 1% in it before it meets resistance, and it should turn over. Now, that is just a purely technical chart, looking at just this chart. I need to take in all of the considerations. Seasonality, remember, September 1st to October 15th is the worst period of the year. We have had a really nasty period from September 1st to October 15th. If this seasonality pattern holds, we should break out above 43.40, which is, I think, likely to happen. That being said, I am not trading that. Why? Because it's too early. This is a guess. I don't trade guesses. Trade the market in front of you, is what we say at Maverick. Until we break out above 43.40, you can be neutral at best. You can be short-term bullish for like the next 2 to 3 days, but that's it. Until we break above 43.40 and then retest that, guess what? You cannot be a market bull until that happens. So, bear rally at best. Let's take a look at the performance of the Forex. We had the dollar and yen basically flat. European currencies, which had been beaten down over the last 6 weeks, they had a rally. The Aussie and Kiwi were the two currencies I was liking on the long side this week. They did not deliver. After the RBA and the RBNZ came out, they were dead. They looked terrible. And so when stuff looks terrible, you don't trade it. Always trade the price action. We talked about how we did not like crypto, and guess what? We still don't like crypto. It still looks pretty terrible. So here's the question. Did anything change? We just took a look at the S&P, and we just said, yes, we're in a bear rally, but technical analysis says we should fail. We are still below the 20, still below the 50, and the slope of the 20 and 50 are still moving down. So guess what? My opinion. I told you my opinion. And I told you that I do think that was, I'm not going to call it the bottom, but I think that is a good short-term bottom we just made based on seasonality patterns, everything like that. I'm not going to go out and trade that. Why? Because I've said stuff like this before and been miserably wrong because the technicals didn't prove what I was saying. If I'm right, the technicals will prove that I'm right. So when we come on the currency room next week and the market is broken up above 43.40, retested it and held, then I can come out and say, guess what? I'm actually going to take action here. I'm going to take action and put some money on the line. More on the long side than the short side. Until that happens, this is what we call cocktail talk at Maverick. Let's take a look at the bond basket. And Anki, you hit it on the head when you said that things look exhausted. So we'll take a look at a dollar chart too. Look at this move. This move has been so strong, and then look at the last couple days. It wanted to break out on Wednesday, failed. Wanted to break out Friday, failed. This is just exhaustion, and that's what you typically get at the end of a very long run. I mean, let's take this run back here. We fell, and all of a sudden, look, we start to get some exhaustion. Look at these candles here. Get some exhaustion, and then we start to move the other direction. Looks like we're going to get a pullback here in bonds, and we'll take a look at a dollar chart in a second, but in dollar, that also supports Ankit and my belief that the market is going to go higher next week. Here's crypto. We did have a nice little run 2 weeks ago, and we got a pullback this week. For the first time in a while, I can't say that cryptos look like garbage. So I'm upgrading from garbage to dirt. I don't know. Okay, what should we upgrade it from? What is a little bit better than garbage, but still not all that good?
I think that's a tough one. It's still pretty terrible, and the reason why it's terrible is that the movements are not happening broad based. So, for example, Bitcoin is doing well, but the Ethereum is actually doing terrible. So, I think as a whole, it's not the best, but you can definitely find the shining coins in between the pile. I think that's where we are at.
Maybe we should have started with poop and upgraded to garbage. I think that is a more applicable one. So look, for the first time, they're looking okay. What you can say is they're now trading above their moving averages, and that's because the moving averages have come down so much because they've been so lousy that now basically the moving averages fell so much while this went sideways that it finally went above it. That being said, we are above the moving averages. The moving average has crossed the 20 days now above the 50-day, and we just pull back to the moving average, and we're looking like we're going to hold here. I am not ready to be bullish on any cryptos here, but my eyes are now open. For the last couple months, I've just said, hey, let's not even look at crypto. Let's just bail on it. Now I'm like, okay, I'm going to be paying attention. If we can get some moves off of this, I will then become a crypto buyer. Until then, nothing. Next week, we have basically one big bit of news here, and that is the CPI out of the U.S. U.S. CPI is going to be the one, and other than that, there's not a whole lot on the schedule that I think you really need to be concerned with. So Thursday morning, 8:30 a.m. Eastern Time, CPI, that should be a mover in all the markets. So this week, CPI is in focus, no central banks, and really not a whole lot of news. This is where I think you can really just trade the charts. Trade the charts, trade the markets in front of you, and as always, buy the strong and short the weak. So let's go into each currency individually and give them a score. Would having more trading capital help you meet your trading goals? Maverick Currencies is the oldest US-based Forex and crypto prop firm. We fund traders just like you with 5- and 6-figure accounts where you keep 70 to 80% of profits. Click the apply link on the top right of this video to start the process. This will take you to a 4-minute video that explains the trader position, and you can read a list of FAQs that answer pretty much all the basic questions you have. After that, if you're interested, fill out an application, and then you'll watch the full-length recruiting video and schedule an interview with our recruiters. Are you our next trader? As Ankit said, Bitcoin is the only one that's looking decent. So again, we popped out of resistance here, we backed off, and this is more of a base. And that's what I really like about Bitcoin here. This is more of a base than a pullback. The strongest things base, and also the weakest things base, they don't pull back. That being said, I'm not ready to buy it yet. Not ready at all, but if I had to, I would buy Bitcoin. Bitcoin Cash has had a pullback. Okay, it's pulled back. It's held the levels. I still like Bitcoin better than Bitcoin Cash. As Ankit mentioned, Ethereum popped up and then said, no, I'm much more comfortable underneath my moving averages, and just sunk right back down. This is one of the reasons, and I agree with Ankit, where we just can't get all that bullish, that yeah, Bitcoin and Bitcoin Cash look okay, but when you look at all the others, they just don't look great. So there's much better things to trade in Forex. So that's where we're going to keep our focus. Ankit, will you run through all the currencies in Forex?
Absolutely. Let's trade the charts. So let's take a look at dollar first. And I think this is where on a daily chart, I just want to keep reminding everyone that until the technicals are broken, let's not get ahead of ourselves. So how many times in the past month that we think the dollar's going to roll over, but then it ended up climbing higher? So, the price actually looks weak, but we just don't have the confirmation yet. But that is something we'll be looking forward to next week. If we take a look at the weekly chart, we have these wicks that are happening on a weekly basis. So again, that is showing a sign of exhaustion. The question is that when it's going to roll over, and what's the catalyst? Can it really help to roll over? And maybe it's the CPI the next week. So I think until I get that confirmation, I want to be, not as aggressive on the bearish side. But I think once this starts to roll over, I think there's a good trade ahead on this one. But for now, as you can see, the daily chart is not really looking a good buy, but it's not really looking a big sell right now. But on a velocity score, it started to weaken here a little bit. So this, again, for all the dollar crosses, will be the primary focus going to next week. Because remember, the dollar crosses are the one that has moved the most in the last month and a half and two. So I think that's where will be the next opportunity. But as we talk about dollar, and then you go into the yen and you realize that why do I want to short dollar when yen looks way weaker? And I think that's the conundrum that a lot of traders have. And I think that's the reason why the dollar can't really sell off as much. The dollar yen has to reverse. Remember last year around the same time, dollar yen moved big to the downside. That really broke that dollar trend to the upside. And right now, if you look at this chart, I think yen looks more weaker. And I was looking at charts, trying to find good dollar setups. And then I realized that, hey, the yen setups looks much better. So I think yen still looks weak. We had a lot of chatter last week that the Bank of Japan intervened, but there was no confirmed reports. $1.50 is a key level for dollar yen. And I think that that's where the intervention risk arises. But as you can see, price action is telling us he wants to go lower. So I think yen goes at the number one on the short side. And I think after that, I'll consider the dollar. Now let's talk about European currencies, because if we look at this whole downward move, I think it was led by some of these European currencies. So look at the Swiss franc, which was one of the best currency. It was a +3 for like the entire summer, and it broke lower. So what is it? Where is it right now? I mean, this week you can see velocity score is higher, but the trending score is still sort of weak. But again, we were at -2 last week. I brought it down to a -1. Is this a bear rally? I mean, right now, every characteristic of this move, it seems like a bear rally. Is it done yet? I think it's still not confirmed yet. We could still go higher. If we go break above that 20-day moving average, we can still move higher. But for now, I think they're still in this little bear rally mode, and it hasn't really turned over yet. So that's something we'll have to decide next week. Same thing happens with the euro as well. And you can see the Swiss franc actually looks a little bit better compared to the euro. But they're in a very similar boat. Euro has been weak, below the 20, below the 50, and this is just a bear rally. We are not really seeing this bear rally fail yet. Remember, every time we want to see something fail, we need to see exhaustion sign. I'm not really seeing the exhaustion. There's some wicks, but there's just not a it's not a big reversal candle yet. So I think next week we can continue sort of slide go sideways to a little bit higher because the velocity score is a little bit better. And out of the bunch, the British pound, I mean, this again similar setup. They came down to, I mean, the lines that I've drawn there, they are the key support. So this is the prior resistance, which is now the support. So we're just bouncing right off that level. And this is where, if I was 10 years ago, or when I first started trading, I would want to start calling the shots. But right now, again, I'm looking for confirmation. It's not giving us a confirmation that is ready to roll over again. This is still a bear rally pattern. So that's where we are with the European currencies. But I think the big turning points are happening in some of the other growth currencies, starting with the Canadian dollar. And the Canadian dollar, I mean, look at that. We went from +3 to -1. Big shift. And remember, this shift is happening much faster as we saw the shift in the dollar. So before I jump on the dollar pairs, I think CAD goes on goes above the dollar as it's rolling over. You can see just hanging off the thread by the 50 moving average. What changed? I mean, maybe the oil weakness. But you can see that this has been a pretty brutal last 2 weeks for the Canadian dollar. So right now, this looks more like a bearish setup to me. You can see how on even a velocity score, it's a beautiful setup today. And again, we got a good job support, but then you can see where the candlestick is for the day. It's not closing at the highs of the day. It's not a reversal candle. It gave up most of the game. So whenever you see what should happen doesn't happen, that's a sign of a weakness there. So don't really love the CAD. I think CAD goes on the short list as well. Now the Aussie and the Kiwi. I mean, look at the Aussie. Sideways. If I don't want to jump the gun here, but again, this thing is not going anywhere. This might go a little bit higher, but then that's the resistance here. So I don't love trading these ranges where it's just not a clear sort of a trend whatsoever. There's a lot of overhead resistance, but if we break above that overhead resistance, that's where I'll get a little bit excited for the Aussie. But I think compared to the Aussie, the Kiwi actually looks better because it doesn't have that much of an overhead resistance. You can see that line that we have, that's a trend line that has been proven multiple times this week is the point where it rolls over. But you can see that it rolled over at first, but then found the bottom there. So at this point, that looks more like a sort of a bullish reversal where it was down, it rallied, it pulled back, and it seems like it wants to go higher. So I think that's where we are. Everything is kind of moving on its own sort of tune. A lot of times we want to pair things together or look at the causation and the correlation, but it always don't work that way. I think so the best thing to do is focus on trend score, focus on velocity scores, and just follow that. I think that's where you're going to find the best setups. Back to you, Rob.
Thanks, Ankit. And when we look at everything all stacked up here, we take a look at the right side. We've got dollar, which we said, hey, we don't want to be looked to be buying it here. It's pulling back. We don't want to look to be shorting it here. So I don't want to touch the dollar. And I said I don't want to touch the cryptos yet. So I'm really left with Kiwi. Kiwi is really the only option to trade on the long side. And then we go over to the left, and we've got all the European currencies at a -1. Really, it's only yen that is really trending here on the longer term. When we take a look at the shorter term, what's moving? The yen does have some velocity on the downside, and the Kiwi is not quite there yet. So for me, Kiwi yen is really the only interesting trade at the first part of this week. And so let's jump into possible trades. I'm only going to look at one here this week, and that is Kiwi yen, and wait for the market to set up some other trades. Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. trade our capital, and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader? Kiwi Yen, let's take a look at it first on a daily chart. So we do have the next bit of resistance up here at around the 89.60, 89.70 area, but I want you to take a look on this daily chart. It is smooth sailing after that. There's not a lot of resistance here. I want to go to a weekly chart and then like a monthly chart and just show you the moves we've had. As you can see, we bottomed out back here in 2020. We've been marching higher here. To me, all of the time frames look really good here. So the only question is, where's the actual entry price? Where's the actual entry? I'm going down to a 4-hour chart here, looking at, okay, where is the entry here? Well, we got overhead resistance right up against, right at 90 here. To me, I'm not looking to make anything early on this week. I want to see what happens at this 90. If it backs off this 90, pulls back, and then makes a turn, I'll definitely look to be buying Kiwi Yen here. But like I said, I'm not going to buy it here with overhead resistance, 40 pips away. That's like 0.4%. Just that's not interesting to me for the trade. I like the trade. I love the trade on all the longer term time frames. Just when I look at the shorter term time frames, where's my entry? I don't love it at this point here. So Kiwi Yen is my favorite trade, but I'm not looking to make it first thing next week. I would love to see that 90 either have resistance or breakout. I want to wait for that first. Ankit, what are you looking at?
Hey, Rob, on the same note, yeah, again, I think we can take a look at some of the dollar crosses too. One of the things that I want to highlight with dollar crosses, like let's just use euro dollar as an example. And you'll find that a lot of the dollar crosses are kind of in the same sort of a pattern. If you can look at the daily chart, they have been trending lower. So again, if you look at a lot of the dollar crosses, you're going to find the exact same thing. So, the question is that are we turning over around from here? Is there an opportunity in the dollar crosses? So, I mean, this is a first attempt. This is 3 candles to the upside. The question is that are we about to turn lower? Because it doesn't matter which dollar pairs you pick, you get the exact same thing. Even dollar CAD. We looked at CAD not being the best. Even dollar CAD, it poked above that resistance at 137 and rejected that pretty quickly. So I think my focus going into next week, outside of the Kiwi pair you looked at, would be the dollar crosses. And maybe that won't come until when we get the CPI. And I think that will be my first sort of a trade. If that CPI and the US dollar kind of rolls over from it, again, the CPI comes on a Thursday. So early on in the week, maybe I'll take a look at yen crosses. But as we go into the CPI on a Thursday, I will be looking to see if the dollar can actually break lower, or is the dollar going to turn around up again. I think that's sort of data dependent. But for now, we can't ignore that some of the dollar crosses that have been downtrending is trying to recover here a little bit. So I think maybe there's some sort of relief in some of those crosses, along with the yen crosses. I think they both kind of look very similar to me. But in between the European currencies and the growth currencies, again, I think they all could recover this week if the dollar does pull back. I think that's the premise here. If the dollar does pull back, then majority of the currency is going to recover against it. So I think that's a big trade here. And that's a tough trade here because these trends don't always give up that easy. So maybe we need that catalyst, and we'll get that catalyst next week. But, as for now, I think that's what I'll be focusing on.
And Ankit, last week I mentioned that I thought the European currencies and the dollar and the yen were totally negatively correlated. If this dollar does take a break, I think the European currencies do very well. I think if the dollar finds its ground and actually bounces, I think the European currencies go lower. I think there's such a huge negative correlation between the two of them that I think just watching that is a decent trade. Let's wrap this up. We do think the equity markets, maybe they're not at the bottom, but they're close to a bottom. That doesn't mean you jump ahead and be a hero. We just are bringing that out so we can start to watch for when the technicals tell us and confirm that, yes, that has indeed happened. So at this point, if the market has bottomed, then yields likely have topped and the dollar has likely topped. And Ankit, I think you're right, but I think that the dollar trade is next week's trade. And you pointed out that it's not going to happen until Thursday and Friday, which very well could be. But I like yen this week, and I think if dollar does crack this week, I love dollar short next week. That's what I'm going to be focusing on. So as always, focus on your relative strength and weakness. Position sizing is key. Everyone have a great weekend, and let's go make some pips tomorrow. Goodbye, everybody.